Good morning, good afternoon, and welcome to today's FIBA webinar. My name is Lucio Feijó Lopes, and I'm the managing partner of the Brazilian law firm Feijó Lopes Advogados, and the head of the structured finance team. Today's topic is lending to Brazilian companies and banks, key legal and structuring aspects for 2018. This webinar will run for about an hour, with some time for questions at the end. Some quick housekeeping before we get started. This webinar is being recorded. We'll be sending the recording and slides to you after we are finished. If you have a question, please use the chat box at the bottom of the webinar control panel, and we will get to your questions after the presentation. So thank you everyone for joining this webinar. We prepared this webinar based on recent experience with banks, funds, and insurers lending to or dealing with Brazilian companies or Brazilian banks. So we designed the course to, within this hour, to discuss some of the basic structures that foreign lenders they use in Brazil, and also giving frequently asked questions from foreigners to us as legal counsel. We put together what we understand like key strategies for foreigners to dealing or doing business with Brazilian companies or banks. So thank you very much for joining, and so then that's what's the webinar will be go over. So the topics will be facilities and structures that we have seen foreign lenders using, key risks and mitigation strategies, the relationship between foreign and local law instruments, also always a good topic, collateral package, things that to understand are important for you to bear in mind, and throughout the presentation, some lessons that we have learned and foreigners have learned from recent deals, restructurings, and some cases of judicial recoveries. So before we move into the structures, we would like to give a glance on the market overview about Brazil. So we know everyone now is having some information on this truck drivers strike that has been Brazil has been facing since last week. We are now feeling that the movement is weakening. So yes, there will be there will be economic effects on the economy, but it's not a material effect. But giving you some information from here on the ground is that we have seen the gas station with more availability of gas now. So our feeling from local business people is that the business should get on track back from next week on. And from our clients, foreign lenders that we have as clients, we don't see that much affecting their mood to come to the country, or any affection on deals that are being negotiated or will be closed within this following days. So yes, it definitely is a big thing in Brazil now, but we hope that until next week everything should be back to the normal track. Another relevant fact that you should consider when you discuss about Brazil is this push to corporate governance and transparency, given the car wash operation that has been happening since 2013. So we have seen foreign lenders jointly, not only lenders, insurers, and investors pushing the Brazilian companies towards more transparency, more availability of documentation, of financial information on facts that might happen with the companies and banks, after the deals are closed, that in the past were more opaque. So if you are now in the point of considering a transaction with a Brazilian entity, you definitely should push for reports, for more corporate transparency, like sharing of information to you, because now on the negotiation table we have feel that companies in Brazil, in order to raise funds or get insured or get an investment, are definitely willing to share information that in the past used to be held at the board level and not shared with lenders or with the market. So it's definitely a point for you to consider and push companies to share more information to you, because this is a whole movement in Brazil. Yes, Brazil, it's a movement that will not change from one day to the other. It's not an overnight change. We understand as a culture that should change like from a decade to the next decade. But now companies definitely are willing to share more strategic information than it was before. So that's a push for corporate governance. Another point is still we see out of 10 transactions that I could give you a number of the 10 latest transactions that I've been involved with, 50% or 40% were restructurings. The other 5% were new transactions, and like one would be involved judicial recovery. So we see like half of the transactions that were involved still have like majority of restructurings, companies not meeting the financial covenants, but it's still meeting the repayment schedule, but more of in terms of financial covenants not being met, and some cases of judicial recovery, but that is down if you compare 2016 to 17, approximately 24%. So the risk has been reduced, but anyway, I've seen more a light in the horizon of a new financing coming to the country. But yes, it's still with a high cost of borrowing. So the cost of money continues to be very high. Give you a parameter from what we have seen from term sheets and in the market is that banks and funds are coming to Brazil for trade finance transactions, charging from a LIBOR plus 4 to ranging from 4 to 12, 4 to 13, depending on the tier that the company or the bank is the borrower is in. So we have seen cost of money from LIBOR plus 4 to 13. So funds tend to be more aggressive, more expensive, but are faster in their approval. They have appetite for risk compared to banks that prefer to stay in the tier 1, tier 2 companies. But that's the cost of borrowing in Brazil remains very, very high. From a deal standpoint, there is this massive inflow for mergers and acquisitions, and also for structured finance, mainly for export prepayment facilities. That is a type of facility is very common in Brazil, widely used, and we will discuss a little bit further in the next slides. Structured finance has been benefited from the exchange rate. I think today exchange rate is close to 3.72, 3.75 reais to $1. It's a very high, given this appreciation of dollar versus real. The demand for commodity remains high, and given this still risky environment that Brazil is living, because the expectation that the growth should start, by this the final quarter of this year, beginning of next year. So the risk remains at a substantial level. We have seen foreign lenders requesting a more heavy collateral package, and on top of collateral package, collateral monitoring. So foreign lenders, especially for the ones that do not have rep office in Brazil or a branch in Brazil, they want to have a third-party company looking at the collateral to monitor and to give the lender the market value on a repeating basis, like on a monthly basis, on a weekly basis, in order for them to be assured that the coverage ratio is fine. So that is a little bit of a market overview. In general, in the past 3-4 months, we see a massive inflow of funds doing trade finance in Brazil, enjoying this time of still high cost of borrowing, and companies like good quality companies willing to pay a little bit more in order to have financing availability. Well, now the point here is to discuss with you some like 2 or 3 structures that are used by foreign lenders in their dealings with Brazilian companies. We would like to go through these structures because we see even foreign lenders that tend to come to Brazil and have a portfolio of clients in Brazil, they still have questions on how the legal structures are made. So we put together this following slides with discussing these structures. The first one is the export prepayment structure. This is the structure used to finance Brazilian exports, and why it is used compared, for example, to direct lending is because as it is tied to the export of Brazilian commodities, the government and Brazilian products, the government gave it a tax incentive. So there is no tax on principal or tax on interest. So it's a very good structure, and it has the benefit of having no tax over principal or over interest. So just go over this structure a little bit. What it is called the triangle structure is that you have the borrower or the Brazilian exporter in green that has a receivable based on an export contract signed or yet to be signed with a off-taker, with an importer. Then a lender look at this potential receivable and prepays the receivable. So then, at the maturity, the off-taker will pay the receivables into the lender's collection account, what we call the triangle structure, and then the transaction is done. From a contractual standpoint, from legal documentation, we have in general documentation above the dotted line. It's a foreign jurisdiction. It's not only used in Brazil, but it's used in other jurisdictions in Latin America. We have the facility agreement, generally governed by New York law. And then you have to assign the export receivables, we have the assignment agreement, also generally governed by New York law. There are situations where foreign lenders that have they are comfortable with Brazilian legislation, they prefer to have the assignment under Brazilian law. But it's more on a case-to-case basis. And then below the dotted line, we have documentation that are connected to the financed goods and also to some collateral in addition to the goods that the borrower will grant to the lender. So have like a promissory note, to have the like the pledge, the mortgage, the fiduciary lien, and the contract with the monitoring firm that will provide the service of monitoring the goods that have been financed. If we're not talking about a direct financing. So this is the export prepayment structure, which is the most used structure in Brazil. Then we talk a little bit in the following slides with respect to from a legal standpoint. The following export prepayment structure is fairly the same as the number one. However, the Brazilian company sets up a trading company offshore, and then the trading company will be the one having the role of borrower in the relationship with the lender, which the borrower then will raise the fund and then will prepay the exports of the Brazilian entity. The Brazilian entity will export to the offshore entity, will then reinvoice to the final taker. We see this structure for medium and large size corporation companies in Brazil, where they export to many countries, so they use the offshore entities for tax planning and other purposes. But it's a very common structure that we see in export prepayment. From a contractual standpoint, we see documentation under New York law, basically the facility agreement, and most of the time the signing agreement. And then below the dotted line, we have to sort of mirror the documentation between the borrower's trading company and the exporter, so that the lender will have the legal assurance and the lender will be comfortable with lending to the Brazilian trading company, the offshore company, and then the structure which is below under the Brazilian jurisdiction is also assigned to the lender. So if there is a default, the lender will have a recourse directly to the Brazilian entity. We explore a little bit more later on. Structure number 3 refers when it's very common when foreign lenders they lend to Brazilian banks, and then the Brazilian bank will use that funding to finance companies in Brazil. So how does that work? And some of you, which are banks, foreign banks, are familiar with that. So foreign lender will have will finance the Brazilian bank, and then you have the documentation. Generally, is a single one-page document, which is the SWIFT message, and then the Brazilian bank will use the proceeds to advance foreign exchange contracts, the ACCs, and other type of loans to Brazilian companies. So this is a very widely used structure when a foreign lender will finance Brazilian banks. We will discuss a little bit later the improvement that we see because in these structures. Because, for example, if there is if you're a foreign lender and you are financing a medium market or a medium Brazilian bank, which you still have the risk, and if there is a default, you just have the SWIFT, which is one page, generally a PDF document. How can you come to Brazil and go after this bank? Do you have a instrument that you can enforce or not? So we'll discuss this point later on in this presentation. So these are the three structures that we see for trade finance in Brazil. Yes, there are the structures of direct lending. So when a foreign lender will lend to a Brazilian company, and the Brazilian company, there is no tie to export. It's just the Brazilian company at maturity will repay and will make the interest payment as on a quarterly basis or semi-annual basis. That's another type of structure. There is a tax impact on this direct lending structure because there is income tax over interest, which doesn't have in the export prepayment structure, but it's also used used by Brazilian companies and banks. So based on our experience and on these structures and on deals that we have done in our experience with a number of transactions assisting foreign lenders and insurers in Brazil, we ran an unofficial survey with our clients, foreign clients, and other foreign non-clients to understand, giving this number of restructuring cases and number of judicial recovery cases, why have these foreign lenders been involved with specific companies that didn't have credit or history or credit quality, at the beginning to be accessing this funding. And we came up with this alarming number of from 60 to 70% of this foreign entity that we have talked to that have some material weaknesses in their risk assessment or surveillance or documentation when dealing with Brazilian companies or banks. So it's a very alarming number that we understand, going through risk assessment, so then you go to surveil the company, so then you are running the company's risk. And we identify that the foreign lenders, in these cases that when distressed, there was this material default or the company entered into judicial recovery, that foreign lenders had some relevant weaknesses in their the entire process of looking at the companies. So what we did was, given this unofficial survey and the high number of some flaws that we identified, we put together key strategies that we understand should help foreign lenders and insurers to mitigate risks in Brazil. So just it doesn't mean that they are just four, but we understand that these four are very relevant. The first one, and the picture reflects how you deal with jurisdictions, not only Brazil, but Latin America. There is a massive regulations and law to every aspect of business, especially in Brazil. And thinking from a regulation taxation standpoint, this is Brazil is very unique. So you need to understand, the tax implications, and how can you, one, reflect into the documentation, and second, if there is a default, and you have a collateral, how taxation will impact you in order for you to recover your exposure. So then this is strategy number one, change the regulation. So I understand that, especially like foreign lenders, they tend to do business not only in Brazil, but do business in a number of countries. But as you do business here, you should understand the market, the specifics of the market, especially with respect to taxation. Give you an example. If you finance a Brazilian company, a commodity company, and you have as a collateral soybeans stored in a warehouse, and you go there and you seize the soybeans, and then you have to sell the soybeans in the local market. How can you, if you sell, what to be the taxation over this over the sale of the soybeans? So if after you deduct the taxes, what will be the net that will left over to you? And then once you have to transfer the proceeds out of Brazil, is there going to be any taxation applicable to the wire of to transfer the money from Brazil to outside of Brazil? So that's one thing with respect to selling the collateral. The second thing, which is very important, we have been involved as of now in a case where the lender is selling the participation to another lender, but this specific the lender the one that's going to be selling the participation is located in one jurisdiction which is not treated by the Brazilian tax regulators as a tax haven. The company, the lender that is buying the participation is located in a tax haven. So that the sale will have an impact over the borrower's payment of taxation in Brazil. And then this, the thing is, has the loan agreement have a language containing that the lender is allowed to sell the participation and the taxation is to be paid by the borrower regardless if the participant is in a tax haven or not. So that's a very important point that's been in discussion now with one of our clients. So strategy number one, be updated on regulation, taxation from structuring, and from the time you are involved, you are already running the risk of the company. If you have to sell your collateral, how tax will impact. Strategy number two refers to risk assessment. And here is a very good picture for you to bear in mind. Foreign lenders, they see in general what is above the waterline, having an iceberg. So it's just a tiny piece of information with respect to Brazilian companies and banks. The whole set of information, which are very relevant information about the companies and lenders, are below the waterline. So, and how can you access the information? So we in that survey that we conducted, we asked lenders to tell us what type of information they look at when they approve a transaction with a Brazilian company or Brazilian bank. So they look at four things. First thing is they look at their financials, which is okay. Second thing, they look at their credit report. Third, they receive operation information from the company, and fourth, they go and have a physical visit to the company's premises, and they get to know the officers and the controlling shareholders. So generally, that's all the information they receive when they approve a transaction. But this set of information is not enough. Absolutely. There is a whole number of information that is not there. available. For example, credit report, the Serasa report and other reports in Brazil, they are from 2 to 3 to 4 months outdated. So there are information about the company's life that is not, when you print a credit report, the information is already 3 to 4 months old. So whatever information that is now happening with the company, you don't consider, you don't run the risk assessment on this information. So that's why we understand that you should but what is this information? For example, Brazil, as I talked before, it started at number 1. Brazil has this very unique tax system, very complicated. So companies tend to file lawsuit to question taxes that the Brazilian authority is imposing on them. And it's okay. It's legal. It's legal and it's widely used. However, some companies, they use this tax lawsuit to defer the payment of taxes. And this tax lawsuit, for example, they are not picked up or identified by credit reports. So what if at the middle of your facility, if it is a 1-year facility or 2-year facility, there is a ruling against the company that will affect the working capital of the company due to a tax litigation. So you haven't identified that. So that's one thing. Second thing, is there any? I'll give you an example. One of our foreign lenders clients was considering to lend to this Brazilian company, and then we suggested to run a search on the existing lawsuits that the company had. So then we discovered that this company had filed over the past 10 years 12 lawsuits against lenders, like Brazilian lenders. Then we saw that they were like professionals in questioning loan agreements in courts. So what the lenders did, they turned down this potential financing and didn't run the risk of this company. So, but those lawsuits are not identified in the credit report. So this is a very important information on the life of the borrower and guarantors. On the collateral, when you do a risk assessment, you need to understand, for example, if you are financing steel, if you are financing soybeans, if you are financing tobacco, if you're financing cotton, if there is a default and you have to sell those the financed good in the market, how liquid is the market? If you're going to sell that tomorrow, for how much will the market will pay you? So on top of the payment, you had to add the tax impact. You have to add the logistic costs, and then you understand when you do a risk assessment and you are negotiating with this potential company, that for a coverage ratio you need not 105, 110% of goods compared to the facility amount, but you need maybe 120, 125, 130% in order to cover for the tax and logistic costs that you're gonna have to bear if there is a default. So it's very important, but you will only be able to do that at time of risk assessment and due diligence. You will not be able to do that after you close and you wire the money to the company, because the money will not agree. So risk assessment is definitely key for you to do business as lender or as insurer in Brazil. Let's go to the third strategy. Third strategy is surveillance. Surveillance. Why we bring this? Because also in that survey, we saw that, it's important to tell you that an official survey, it's not an official one, it's an unofficial, but we got some very good piece of information. The second piece of information refers to surveillance. We identified two groups of foreign lenders. One group is a lender, a type of lender that close the deal, wire the money, and will knock the borrower's door at the time of principal payment or of interest payment or principal payment. They don't want to know or follow up on really relevant facts about the borrower's life. That's one type. The second type is lenders who definitely follow up on the borrower's life. So they want to know what's happening with the operations of the company, if there is any major lawsuit being filed by or against the company, if there is anything about the controller shareholders, is there anything about the collateral that have been giving, the goods that have been given as collateral. So they follow up. As imagined, we out of these two groups, the ones that were proactive and could mitigate or reduce the risk in times of economic downturn, or in times of these companies went for some reason bad, or they were forced to or breached covenants, didn't pay interest or repaid principal. The banks that were following up on relevant facts, they were the ones that were ahead of the others, so they could enhance their collateral position before the others know any negative facts about the company. So this is the strategy number 3. So our suggestion is that you definitely do you definitely surveil periodically your clients in Brazil. If they break financial covenants, if there is any problem with the coverage ratio of collateral versus outstanding principal, it's very common. If you have a finance product that has a change in their changing price with certain frequency, you need to understand if you are below or above the coverage ratio, and you need to check the credit report. But also to see if any major litigation, or if the company have defaulted on any major any relevant debt during the lifetime of your facility, so that you go there and deal with the company before the others. So here's the method: be ahead of the fact. But you can only be ahead of the fact if you surveil that thing. So that's the strategy number 3. It's very, very important. So strategy number 4, which is the final strategy, is with respect to understand the documentation, the loan documentation that you have on hand, and also the collateral package. We see that foreign lenders, especially the ones that start doing business in Brazil, if they have a loan agreement governed by New York law, they are very comfortable. The credit committee is very comfortable. But what if in a rainy Tuesday morning, the company in Brazil calls you and tells you that they will not have money to pay interest, or they have no money to pay principal, and they will not have money at all to pay any of the creditors because they filed for judicial recovery, or they are defaulting all credit, in all of their debts. What you have on hand in order to immediately enforce your rights and protect your exposure. So then I brought here the same slide as one of the beginning when we discussed about the structure. And just taking as example the export prepayment structure. So if you receive this call or you learn that the company is in default, how can you go immediately and take actions in order to, one, to force the company to pay you because you have good documentation, or to go and seize any assets that you have available? And I can tell you, it's not going to be through New York documentation, New York law documentation. It's going to be through the local law documentation that will give you recourse where the borrower has assets. In general, yes, Brazilian companies, they may have assets in New York or other jurisdiction outside Brazil, but in general, their main assets are in Brazil. So you need to have a recourse or legal instruments that will bring the borrowers to the negotiation table, one, or if he doesn't come, will you be able to enforce your rights and take possession of the goods? So it's very important that you understand what you have, which documentation and collateral package that you have on hand, and what measures you should take immediately. One example I'll give to you is that we have seen in certain cases companies or lenders that have prefer facility agreement governed by New York law and promissory note governed by New York law. That definitely is not the appropriate way to deal with Brazil, because the promissory note is the instrument jointly with the facility agreement, but the promissory note is the instrument that we will enforce in court immediately. So it's a liquid instrument, immediately payable because it is at sight. So the promissory note has to be under Brazilian law. It doesn't mean mandatory, but we definitely advise. And also on top of that, the other documents that are governed by local law. And I tell you, not only regarding Brazil, but also with respect to other jurisdictions in Latin America. So first thing is understand what documentation and collateral package instrument you have and how you are going to take action. For lenders that do not finance Brazilian companies, but they do have exposure to Brazil through Brazilian banks, we generally see the majority of time they're using a SWIFT as the only document that they have documenting the loan to a Brazilian bank. To us, that's a weak documentation package, because if you have a recourse, if you have to enforce this document in Brazilian courts, it's a PDF, and you definitely would have a problem in enforcing this document in Brazil, where the Brazilian bank has the assets. So we generally suggest foreign lenders to finance Brazilian banks through can be a master loan agreement or a loan agreement, and backed by a promissory note, and then you have like a sort of umbrella agreement, and then the SWIFT will be linked to the master agreement, so that then you would have a document that could be used if there is a default. You can come to Brazilian court and enforce and take possession of the bank assets, or have more leverage to recover their exposure. That's to us. We suggest clients to change from SWIFT to a master loan agreement plus a promissory note, and then a SWIFT attached to that. So this is strategy number 4. Why do we understand that the local law documentation should work with foreign law documentation? Because if you consider, just as example, export prepayment structure for a commodity finance. If we divide the cycle into 4, like from crop to then you harvest, let's see if it is a soybean, and then you harvest, then you go to storage, and then you have to transport the beans to the port, and then it translates into money. Out of these four phases of the cycle, 4/30 of or 75% of the cycle, you are exposed to Brazilian law documentation. So that's why Brazilian law documentation is very, not only Brazilian, but local law documentation is very important for you when you want to consider to be protected. So yes, New York law or other, either England law or Miami, Florida law, or whatever other developed country jurisdiction is okay to have the facility agreement or the assignment security agreement, but the document, you need to have local law documents so that you can go and enforce a document in case you need, because of this exposure. Then we are just like moving to the final part of this webinar. I'm not going to go through this pizza here chart where I go through. I just listed the main legal instruments that foreign lenders use in this when they do commodity finance in Brazil. But as you're going to receive the slides, you can, if you do commodity finance, you can go and run through the pizza and understand what are the collateral instruments available to each part of the cycle. So then you can discuss internally and get your collateral position in a good level. Okay, so that's for you. I'm not going to go over this specific slide. So then, as a conclusion message, I have like four steps for me to remind you. First is consider especially the tax and costs provisions in your documentation, and in terms of the impacts of the tax and costs on when you are enforcing collateral in Brazil and other jurisdictions like Latin America, but it will affect how the net of this sale proceeds will then be the means of repaying your exposure. So that's one very relevant thing. Second is risk assessment, due diligence and risk assessment. You need to improve risk assessment, and by improving that, you need to access information beyond what generally foreign lenders access when they're about to approve a transaction. The third point is surveillance. Prefer not being the type of lender that will just knock the door at time you have interest payment or principal repayment. You need to to follow up on relevant facts about your client locally. And fourth one, understand documentation and collateral package. We put together, you're going to receive this slide, and we put together a 1 minute and 40 second, I think, video on like summarizing the 4 or 5 strategies. And you, by clicking on this link, when you receive the deck of slides, you'll be able to receive this, which is like a summary. We compressed this 1 hour webinar into like 1.4 minute video, so you'll be able to access this information. So thank you very much, and we're just going to open for questions, and so if you have any questions, just let us know. So one of the questions that I see that are generally made by foreign lenders is with respect to what type of information they do have to access on top of they already have, as I said to you. So one relevant information is going through the existing litigation of the local bank or local company. So you extract a number of good information from that. If the company is a litigator or the company just have a few litigations that would not, classify this company as a frequently litigator. Litigation on taxation, on tax, on commercial, on financial. If there is any dispute between the controlling among the shareholders, that's also important because it's a complicated company. It is also important. And a second question that we generally receive from foreign lenders is with respect to if they have to enforce, what do they enforce? If they have to enforce documentation, what do they enforce in local court? So generally, you're going to enforce the promissory note jointly with the facility agreement. And so the promissory note is the key document for you in Brazilian court. And we don't have experiences in Brazil where courts are questioning the validity of a well-drafted promissory note governed by New York law. Governed by Brazilian law. So if you have a promissory note and you attach the facility agreement, we haven't seen any questioning on the validity of this Brazilian promissory note plus a facility agreement. So we definitely would suggest you. I have one more question. A few questions here more. Are there any currency controls or limits imposed on Brazilian companies for loan repayments? No, there is no restrictions. You can enter into a transaction at this Brazil. For the past 30 years, has not seen any restriction on or limitations on payment to foreign lenders. So it's been like 30 years. We don't see, for example, in bonds issuance or offerings of securities in Brazil, this type of risk factor anymore in the offering memorandum. So it's a risk that is not considered as a relevant risk for Brazil. Another question is, question number 2 here, considering bank-to-bank lending, under what circumstance can the foreign lender have recourse to the local borrower if the local bank becomes insolvent? That's a very good point. It depends on the documentation you have with the between you and the Brazilian bank. So the documentation between the Brazilian bank and the local borrower. So the documentation under the local borrower and the Brazilian bank have to have language that this financing has been the result of the fund raised abroad. So if there is a default, the foreign lender could step in the shoes of the Brazilian bank and enforce the documentation against the Brazilian borrower. And also, there should be an assignment between the Brazilian bank and the foreign bank, where if there is a default, the foreign bank foreign lenders is automatically assigned into the shoes of the Brazilian bank and can use use the rights, enforce the rights that the Brazilian bank has against the borrower, including collateral and credit rights. So it's going to be a matter of how the documents are drafted, and you have this channel from the foreign lender to directly to the Brazilian borrower. So you need to have language between the Brazilian borrower and the Brazilian bank, and good language between the Brazilian bank and the foreign lender. We have another question here is, when it comes to repayment of a loan to a foreign bank lender, let me see. Brazil has Brazilian Central Bank has a channel which says that when you enforce a documentation in Brazil due to like enforce a collateral documentation, so you have to go after to seek that credit. The Brazilian Central Bank, so I'm just not telling specifically to one specific case, but in general, Brazil Central Bank has a channel where money is recovered in Brazil and you can wire that money offshore. So then you have a channel which Central Bank allows a foreign lender to enforce the credit in Brazil and then use that channel to through a Brazilian bank to wire out that money to get repaid of that debt. So now it finished like 5 questions. I know the conversation is the 1 hour webinar is over. So I'll just tell you that the document, the deck of slides will be shared with you along with the recording. So I'd like to thank you all very much for joining this call. You have the contact there in case you have want to exchange you have any further question, just let me know, and we'll be very glad to talk to you. Thank you very much for joining, and we'll see you soon in other course. Thank you.